And welcome to Clear Picture Financial with Jason at Prime Capital Investment Advisors. I'm Jackie Selby. I am your consumer advocate here with Jason Noble. And this is pretty exciting news, Jason. I love this so much that Advisor Hub published their top advisors list of 100 advisors, and you made the top 5. You made the top 5.
Yeah, top 5.
And you're the only guy in South Carolina to make the top 100 at all, let alone the top 5. Congratulations.
Oh, thank you. It's wonderful to represent the Palmetto State.
Oh, I just love that you say that. You know, as you and I discussed off camera, my great-grandfather is from South Carolina, and my great-great-grandfather from South Carolina, and my great-great-great-grandmother from South Carolina. So I'm really excited to be your host and, your advisor for this one. Or should I say, I am excited to be your consumer advocate for this show, Jason.
Yes.
It's really fun. We have a lot of things in common, but I guess we should get around to the show, actually, and talk about the Fed, because this is big news, right?
Well, yeah, the Federal Reserve, they raised their interest rates by 1/4 point, lifting interest rates to the highest level in 22 years, Jackie. I mean,
it's essentially a generation, isn't it?
It really is. And, we're looking at the economic activity in the short and long term today, and we're going to dive into those particulars because it's so important to understand how this all kind of fits in.
It really is. Do you want to talk briefly about what inflation is and, how does this fold into more inflation?
Well, yeah. Well, inflation is just a measurement of what is the increase of cost of goods and services over time. And, how it folds into everything is it can be expected in a fairly normal, healthy economy. But I would say the limitations on American consumer spending power really begins to present a problem for folks as inflation continues to rise even further. I really see it as another way of taxing Americans. And, my clients who are very wealthy, they see this more of a nuisance. But I have other clients who this is having a bigger impact on because of their spending dollars. They just can't get as much as what they once could get at the grocery store, at the pump. And if they're on a fixed income, then they have to start making decisions and choices, and that could be really tough for a lot of Americans.
Well, I think Americans in general, regardless of income level and so forth, are looking at the packages of beef and thinking, are we going to have steaks on Sunday or are we going to have hamburgers? Or are we going to have beef at all? It just depends, because the prices are so dang high.
It really is. And I remember my wife was telling me when she went to the store to get just like chicken, for crying out loud.
Yeah.
There was no chicken breast left, and she had to pivot. And so we're seeing this, especially when we go to the grocery store. I think that's where most Americans will see it. Now, here's the interesting thing. There's CPI, Consumer Price Index.
Right.
It doesn't factor in food. So you kind of go, okay, if it starts factoring in food, what is the real true number of inflation across the country? And the thing that I'm working with my clients on right now, and we factor in inflation into their overall financial plan. And I have always added a little bit higher inflation rate to stress test the analysis.
Uh-huh.
And so when inflation rises like it did, we can't have the government printing as much money as they were and not expecting inflation. And the Federal Reserve Chairman, Jerome Powell, saying this is transitory. Janet Yellen saying this is transitory inflation. Well, that wasn't true. And it's true.
Right.
And it's shown it's reared its ugly head as it continued on going into 2023. So, so when you have this into your financial plan and you're having that conversation with your advisor, it's already baked in, and so you could be able to weather the storm a little bit better. But the question that I have for those that are listening is if you are not having this baked in by your advisor, how are you addressing this right now yourself? And isn't that the role of the advisor, to be in your corner to help you navigate these important decisions? And that's the stuff that we're doing right now with our clients.
Well, I think that folks, if this is striking a chord with anyone, just real quick here during the interview, I'd like to throw in your phone number because I know that you do hold open a certain amount of slots for folks to get in and see you on a non-obligatory meeting. It's a meet and greet type of a meeting, and the number is 843-743-2926. It's 843-743-2926. Anyways, let's continue the discussion, Jason, about just exactly how to diversify, if you want to call it pivot at this point in time.
Well, rather than like solely relying on traditional savings accounts, you would want to consider recalibrating your investments and consider taking advantage of other options to really grow your money for retirement and take advantage of the different asset classes like stocks, bonds, cash and cash equivalents, real estate, commodities. I know I'm just listing a whole bunch right now, Jackie, but
Right.
I really break down the investments into 3 Ps. You have the public market, the private market, and then you have protected assets. And protected assets have really shown to really help a lot of people navigate the volatility that we saw last year going into this year.
And I think that I like the 3 Ps. I like the third P, the protected, because, that's my perspective at my point in my life is like, I want this stuff protected. I want as much safety as possible. Are you finding that to be true with your people?
Absolutely. And so when you're having the conversation with an advisor that looks at everything holistically, like I do,
Yes.
I just had this meeting yesterday with a new client. I said, when you work with an advisor that says, just give me your money, good luck with everything else.
Right.
It's a very transactional relationship, and you don't have to be as financially vulnerable. But we were looking at their cash flow going right into navigating inflation. And they said that they were spending around $226,000 a year. Well, because of their high income, there was a $120,000 gap. That's a $10,000 a month gap on what we couldn't allocate. We couldn't figure out where it was going. So if it's not going into investments and it's not in their savings account, where is it going?
Was it willy-nilly spending? Was it matter of budgeting?
They got 3 kids, and it was just more of kids are expensive, and I think they weren't really looking at a budget. Right.
Uh-huh.
And so we're not going to go down the path of going into budget. We're just going to go into the conversation of cash flow, money in, money out. And what do we do with the difference? But then from there, I break into what the investments should be based off of the risk capacity of the financial plan.
Okay.
And so when we look at the risk capacity of the financial plan, having a portion allocated to protected assets is creating a lot of comfort for a lot of my clients as we navigate it through the volatility.
Sure. And it sounds like that's easier than saying, okay, let's start blocking these leaks in your budget. That's a more confrontational conversation, isn't it?
Yeah, well, with budgeting, I'll touch on this for a little bit.
Please.
You just want to be realistic about your projected costs and taking rising prices for necessities like healthcare and housing and everyday living costs, really into account. Now, when I break down the cost, I don't put inflation on the mortgage because that's a fixed cost, right? Now, rent, however, I will put inflation on rent because we expect that to move around and mostly move up, especially if you live in the Charleston area.
Move up.
Yeah.
Yes, and some people have sold their homes, haven't they? And they're like, well, we're in our latter years. We might want to live in Florida for a year. We might want to live in South Carolina for 2 years. And so they are renting. So I'm glad that you brought up that budgetary item with the rent. I think that I see that a lot with friends and family and older family members. Well, I think the importance of seeking out the professional help from you is really the way to go because you know so many angles here.
Well, I have a couple that I've been working with now for 5 years, and they want to consider moving to Texas.
Oh.
But then they were also looking at Colorado Springs. But then they were also looking at maybe California. So they have a couple irons in the fire there. And so the conversation that we had, and we revisited earlier in the week, was to actually rent in Texas for 6 months. And in those 6 months, be part of the community, but then also visit other parts of the country that they're considering.
I love it.
And by doing that, they could be able to then make a purchase down the road.
Right.
And one of the things that we looked at was just using treasuries to provide them downside protection and have a nice interest rate. I mean, got a 6-month treasury at 5.25. And those rates could change. So if you're listening, just know that those rates could change. But like that, they're gonna have that protection backed by the federal government and earn an interest rate on that money in a short period of time that's pretty attractive.
Right.
And so that could help them with their rent payments is what we're looking at.